A very warm welcome to one and all. I am Ragi or Nair and I'll be taking today's study circle. As you all know, the topic I have chosen for this session is the presumptive taxation. This topic is covered in CA Intermediate as well as CA Final Direct Tax paper. In this session, we'll be covering Section 44AD, 44ADA and 44AE, the presumptive taxation provisions for residents, and Section 44B, 44BB, 44BBA and 44BBB, the provisions relating to non-residents and foreign taxpayers. Okay, so before going to the topic, first let's understand what is presumptive taxation scheme. Why has government introduced such a scheme? Under the Income Tax Act, every business is required to maintain books of accounts. They are required to get it audited by a chartered accountant. Also, they are required to pay advance tax, and there are a lot of other compliance requirements. The profit of the business is derived by subtracting the expenses from the revenue. It means that we have to keep a record of all the expenses and all the incomes, be it the electricity bill, the water bill, or any other petty expenses. Further, we all know how complex is the computation of income as per the PGBP provisions. Not every person is a chartered accountant or a CA student. So for a small taxpayer, it is a very tedious task to maintain books of accounts, to get it audited, pay advance taxes and the calculation of his income. Thus, the government has introduced a new scheme called the Presumptive Taxation Scheme to reduce the burden of compliance to such small taxpayers. It is a fairly old and useful scheme introduced and various improvements have been made by the government at regular intervals to ensure that it remains useful and easy to understand for the taxpayers. So, what is the concept of presumptive taxation? How is income computed under presumptive taxation? Okay. It is a very simple method where the tax liability is computed on the presumed income, not on the actual income. That is, the total turnover or total sales of the SSE is taken and a prescribed percentage is applied on it. From that, we will derive at a presumed income or average income, and the tax liability will be computed on such presumed income. Unlike the normal income tax provisions, it is a very simple method which is very useful to the small taxpayers. As I said, in this session we will be discussing the presumptive taxation schemes in two parts. The first part is regarding the residence, in which we will cover section 44AD, 44ADA and 44AE. And the second part we will be covering the presumptive taxation schemes for non-residents and foreign taxpayers, which covers section 44B, 44BB, 44BBA and 44BBB. Now, let's discuss each section in detail. First, section 44AD. Section 44AD is a presumptive taxation scheme for businesses. This section overrules the whole chapter of PGBP. Okay, first let's understand who is the eligible SSE for section 44AD. Every resident individual, resident Hindu undivided family, resident partnership firm other than a limited liability partnership is an eligible SSE. That is, every resident individual, resident HUF, resident partnership firm other than LLP is eligible to opt for section 44AD. And this section is applicable for all businesses, for any type of business except three. They are section 44AE business. 44AE is a presumptive taxation scheme for transporters. It is a separate section which we will be covering later, and hence it is excluded from 44AD. So 44AE business, agency business, commission and brokerage business. So an SSE engaged in any business other than the three will be eligible to opt for section 44AD. And there is one more eligibility criteria which is regarding the turnover. That is, the total turnover or gross receipts should be less than 2 crores. So, an SSE whose turnover or gross receipts is less than 2 crore is eligible to opt for section 44 AD. If the turnover or gross receipts is more than 2 crore, then he is not eligible to opt for section 44 AD and he should go for the normal provisions. So till now we have discussed who is the eligible assessee for section 44 AD. Every resident individual, resident HUF, resident partnership firm other than an LLP who is engaged in any business other than 44 AE business, agency business, commission and brokerage business, and whose turnover or gross receipts is less than 2 crores is eligible to opt for section 44 AD. Okay. As I already mentioned, under the presumptive taxation scheme, a prescribed percentage will be applied on the total turnover to arrive at the presumed income, and tax will be computed on such presumed income. So, under section 44 AD, income will be presumed to be 8% of the total turnover of the SSC. It is 8% of the total turnover of the SSC. However, to encourage the business to receive payments digitally, the government also decided to give several incentives to businesses who receives payments digitally. Hence, if a business receives payments digitally, he can claim income to be 6% of the total turnover or the payments received digitally through account pay check, account pay demand draft, electronic payment through bank account, or any other electronic mode as may be prescribed. And it should be received up to the due date of return filing under section 139 subsection 1. So, if a business receives payments digitally through account pay check, account pay demand draft, electronic payment through bank account, or any other electronic mode as may be prescribed, then income will be presumed to be 6% of the total turnover of the SSC, and in any other cases it will be 8% of the total turnover of the SSC. This incentive was introduced in 2016 after the demonetization of currency and is applicable from 2016-17 financial year onwards. Now let's see what is opting in or out of presumptive taxation under 44 AD. Any person who is eligible to avail the benefit of section 44 AD as per the eligibility mentioned earlier can at any time opt for the scheme of presumptive taxation. If he opts in, he shall continue with the scheme for next 5 years. Moreover, a person can also opt out of the presumptive taxation scheme. However, as per the latest amended laws, if a person opts out of the scheme, then he cannot opt for the scheme for the next 5 years. Let's see with an example. That is, suppose if a person opts for the presumptive taxation scheme for financial year 2021, then he shall continue with the scheme for the next 5 years. Suppose after 2 years he wants to go to the normal provisions, he wants to opt out of presumptive taxation scheme, then he may do so, but he cannot come back. He cannot opt for the presumptive taxation scheme again for the next 5 years. Now let's quickly discuss some points regarding section 44 AD. What if the SSE is engaged in or the SSE is carrying on more than one business? Okay, in that case, the total turnover of all the businesses will be taken into account for section 44 AD. Okay. So what if the SSE is engaged in business as well as profession? In that case, for the section 44 AD will be applied on the income earned from the business only. Okay, done. Then if I am declaring my income as per presumptive taxation, then will I get the benefit of chapter 60 deductions? Why not? Yes, you will get it. Even if you are declaring your income as per the presumptive taxation schemes, you are eligible for chapter 60 deductions with certain exemptions which we will be discussing later. Okay. And there are a few more points, but since they are common to section 44 ADA and 44 AE, I will be discussing it after discussing these two sections. Now let's move on to section 44A-DA. This section is applicable for professionals. Who is eligible assessee for this section is not clearly specified in this section. They just mentioned that he should be a resident assessee engaged in profession as referred in section 44AA. But when the budget was declared at the time of memorandum explaining, it was clearly written that the resident assessee should be a resident individual, resident HUF or a resident partnership firm other than a limited liability partnership. So these resident assessees who are engaged in the profession as referred in section 44AA is eligible for section 44A-DA Presumptive Taxation Scheme. So now let's see who are the specified persons as per section 44AA. Every professional or every assessee engaged in the profession of medical, legal, accountancy, film artist, engineering, technical consultancy, architectural, interior decorator, company secretary or any other profession as may be specified. These are the persons. These persons are the specified persons as per 44AA who are eligible to opt for section 44A-DA. What is the eligibility criteria for availing the benefit under section 44A-DA? To be eligible, the gross receipts of the assessee from the profession mentioned above should be less than 50 lakhs rupees. That is, the gross receipts from the profession should not exceed rupees 50 lakhs rupees. If the gross receipts of the assessee who is engaged in the profession as mentioned in section 44AA is less than 50 lakhs, then he is eligible to opt the presumptive taxation scheme under 44A-DA. But if the gross receipts is more than 50 lakhs rupees, then he is not eligible for 44A-DA presumptive taxation scheme. So, what is the prescribed percentage? Okay, for 44AD, we saw it was 8% or 6% as the case may be. What is it for 44ADA? So, in case of section 44ADA, the presumptive income will be 50% of the gross receipts. That is, 50% will be applied on the gross receipts to arrive at the presumed income, and on that income tax will be paid. So, as we discussed, section 44ADA is applicable for resident individual, resident HUF or resident partnership firms other than LLP who is engaged in profession as specified in section 44AA, and the eligibility criteria is the gross receipts of such assessee from the profession should be less than or should not exceed 50 lakhs rupees. In such a case, or if the assessee opts for 44ADA, then the presumptive income will be 50% of the gross receipts of the assessee from the profession. Okay, as I already said, there are a few more points which we will be discussing at the end. Now, let's quickly move on to section 44AE, the presumptive taxation for transporters. As I already said, this section 44AE, is specifically excluded from section 44AD because it is a separate section or separate scheme available for transporters. Okay, so who is the eligible assessee here? All the persons who are engaged in the business of plying, hiring or leasing of goods carriages are eligible for opting for availing the benefit of section 44AE. This section is applicable for assessees who owns maximum of 10 vehicles at any time during the previous year. That is, the assessee should own a maximum of 10 vehicles. That is up to 2 vehicles. If the assessee owns less than or equal to 10 vehicles, then he is eligible to go for 44AE. But if the assessee owns more than 10 vehicles at any time during the previous year, then he is not eligible for availing section 44AE. And also we should be clear that the word used is owned. So it is not necessary that the vehicle should be put to use. even if the vehicle was in garage for the whole year, that vehicle will be counted for the purpose of section 44AE. Now, what is the taxable income amount under the presumptive taxation as per 44AE? So there are two parts. For heavy goods vehicle, the income will be rupees 1000 per ton of gross vehicle weight or unladen weight, as the case may be, for every month or part of the month. And for other vehicle, rupees 7500 per month or part of the month. So, first we have to understand when will a vehicle be classified as heavy goods vehicle or other vehicle. So, if the gross vehicle weight or the capacity of the vehicle is more than 12,000 kilograms or 12 tons, then the vehicle will be classified as a heavy goods vehicle. And in all other cases, the vehicle will be other vehicle. So, in case of heavy goods vehicle, the presumptive income will be rupees 1000 per ton of gross vehicle weight or unladen weight, as the case may be, for every month or part of the month. So, there was a dispute whether to take the gross vehicle weight or the unladen weight. First, we have to understand what is gross vehicle weight and unladen weight. Unladen weight is the weight of the vehicle when it is empty, and gross vehicle weight is the weight of the vehicle when the goods are loaded. So, the CBDT has clarified that if the gross vehicle weight is available, then it should be taken, and if it is not available, then the unladen weight should be taken. So, and in case of other vehicles, rupees 7500 per month or part of the month. Till now, we have discussed section 44AD, 44ADA and 44AE. Now, let's quickly discuss some points which are common for all these three sections. These schemes cannot be adopted by a person who has made any claims towards deduction under section 10A, 10AA, 10B or 10BA or under sections 80HH to 80RRB in the previous year. That is, if the assessee has claimed deductions under any of these sections, then he cannot opt for any of the presumptive taxation schemes. The eligible assessee is required to pay advance tax. However, there will be only one installment, that is 15th March of the financial year. Under normal provisions, the assessee is required to pay advance tax quarterly. But if he opts for presumptive taxation scheme, then he is required to pay advance tax, but there will be only one installment, that is 15th of March. And if the assessee declares income as per section 44AD and his turnover is up to 2 crores, then the assessee is not required to maintain books of accounts and get it audited. This is a very important point. That is, under normal provisions, as per section 44AA, in case of businesses, if the profit of the business exceeds 1,20,000 rupees or the turnover exceeds 10 lakhs rupees, then the assessee is required to maintain books of accounts. Similarly, as per section 44AB, if the turnover of the business exceeds 1 crore rupees, then he is required to get his books of accounts audited. But if the assessee opts for presumptive taxation scheme, then even if his turnover or the profit is more than the limits, he is not required to maintain books of accounts or get it audited. For example, for an assessee having turnover of 1 crore 50 lakhs rupees, under normal provisions, he is required to maintain books of accounts because his turnover exceeds 10 lakhs rupees, and he is also required to get his books of accounts audited because his turnover exceeds 1 crore rupees. But if the assessee opts for presumptive taxation, then he is not required to maintain books of accounts and get it audited. Next point. Deduction of expenditure under section 30 to 38 shall not be allowed. That is, no further deductions, including depreciation, will not be allowed to the assessee. Next, a person can declare income at a lower rate However, if he does so and his net taxable income is more than the basic exemption, then he is required to maintain books of accounts and get it audited. We know as per section 44 AD, the income will be 6% or 8% of the turnover as the case may be. And as per 44 ADA, the income will be 50% of the turnover of the gross receipts. But if the assessee wants to declare income at a lower rate, then he has the right, he is eligible, he can do so. But if he does so, then he is compulsorily required to maintain books of accounts and get it audited. Next, partner's remuneration, salary, interest, etc. as per section 40 subsection B shall not be deductible while computing income under section 44 AD and 44 ADA. However, it shall be deductible while computing income under section 44 AE. So, now we have completed all the points regarding section 44 AD, ADA and AE, and that is the end of presumptive taxation schemes for residents. Okay, now let's quickly discuss a simple example incorporating all the three sections. Mr. India is a consultant and Mr. Pakistan comes to him with a problem that he is carrying on business and is unable to maintain books of accounts. He seeks advice of Mr. India as to what he must do in this case. Okay, so in this question, the assessee has not maintained books of accounts. So what he can do is that he can opt for presumptive taxation scheme. In the solution, I've divided into three alternatives. Okay, so alternative 1, if he is a resident person, not a company and LLP, and has turnover or gross receipts less than 2 crores. So if the person is a resident assessee and has a turnover less than 2 crores, then he is eligible to avail section 44AD. So just look at the details. Total turnover is given as 20 lakhs rupees. Okay, it is less than 2 crore. He is eligible to opt for section 44 AD. And the split of the turnover is given. The turnover which is received in cash is 10 lakhs and which is received through digital mode is 10 lakhs. So how will we calculate the presumptive income? We already discussed for those payments which are received through digital mode or electronic mode, the income will be 6% of the amount received, and in any other cases it will be 8%. So in this case, the income which is received in cash, the income will be 10 lakhs into 8%, that is 80,000 rupees. And for the amount which is received through digital mode or electronic mode, it will be 6%, that is equal to 10 lakhs into 6%, which equals 60,000 rupees. Hence, if the person opts for 44 AD, his total taxable income will be 80,000 plus 60,000, that is equal to 1,40,000. Alternative 2. This option is available if he is a professional specified under section 44AA and whose gross receipts does not exceed 50 lakhs. Okay, so if he is a professional specified under 44AA and his gross receipts is less than 50 lakhs, he is eligible to opt for section 44ADA. Okay, in this case, total gross receipts is 20 lakhs rupees. So, as per section 44ADA, the presumptive income or PGBP income will be 50% of the gross receipts. That is equal to 20 lakhs into 50%, which is 10 lakhs rupees. So if he opts for section 44ADA, his income will be 10 lakhs rupees. Now, alternative 3. If he is engaged in the business of plying, hiring or leasing of goods carriages and he owns 9 vehicles during the previous year. Just check the eligibility criteria of 44AE. That is, the assessee should be engaged in the business of plying, hiring or leasing of goods carriages and he should own a maximum of 10 vehicles at any time during the previous year. Okay, both the conditions are satisfied and hence the assessee is eligible to opt for 44AE. So, what was the presumptive income as per this section? Okay, for heavy goods vehicles, it was rupees 1000 per ton of the gross vehicle weight or unladen weight for each month or part of the month. And in case of other vehicle, it was rupees 7500 per month or part of the month. Okay. So in this case, the type of vehicle is not mentioned. Hence, it is assumed that it is other vehicle. Okay. So the income per month per vehicle will be 7500. In the question, it is mentioned. It is given that there are 9 vehicles. So the total monthly income of all the vehicles will be 7500 into 9. That is equal to 67,500. And for the annual income will be 67,500 into 12, which is 8,10,000 rupees. Okay, now let's move on to the presumptive taxation schemes for non-residents and foreign taxpayers. Okay, here there are 4 sections which are exclusively for non-residents. First, section 44B. Section 44B is applicable for non-residents who are engaged in shipping business. So, in this case, the presumptive income will be 7.5% of the specified sum. This 7.5% of the specified sum will be the income, and on that income, tax will be computed as per the normal tax rate which is applicable for non-residents. So, what is the specified sum? The specified sum is the aggregate of 2 amounts. Okay. First case, when the passengers, livestock or goods are shipped at any port in India and the payment is made outside India. Okay, so that is the services rendered in India and payment made outside India. The second case where the passengers or livestock or goods are shipped at a port outside India, but the amount is received or deemed to be received in India. So the total of these 2 amounts is the specified sum, and 7.5% of this specified sum is the presumptive income as per section 44B, which is available to non-residents who are engaged in shipping businesses. Okay. The next is section 44BBA. It is similar to section 44B, but it is available to non-residents who are engaged in the operation of aircraft. Okay, 44B is available for shipping business, but 44BBA is available for the non-residents who are engaged in operation of aircraft. Here, the presumptive income will be 5% of the specified sum. For 44B, it was 7.5%. For 44BBA, it is 5% of the specified sum. The meaning of specified sum is same in both the cases. Okay. The question here is whether the non-resident can declare income at a lower rate. Earlier we have discussed that for residents, the resident may declare income at a lower rate, but he is compulsorily required to maintain books of accounts and get it audited. But in case of section 44B and section 44BBA, the non-resident has no option to declare income at a lower rate. He cannot declare income at a lower rate. Okay. Now let's discuss section 44BB. Section 44BB is available for non-residents who are engaged in the business of providing services or facilities in connection with or supplying plant and machinery on hire used or to be used in the prospecting for or extraction or production of mineral oils. Just be clear that here the assessee need not be engaged in the business of extraction or production of mineral oils. He should be engaged in the business of providing services in connection with or supplying plant and machinery on hire in connection with the extraction or production of mineral oils. The business of extraction or production of mineral oils may be the business of any other person. Okay, the assessee should be engaged in the business of providing services or facilities in connection with the extraction or production of mineral oils. Okay, in this case, the presumptive income will be 10% of the specified sum. 10% of the specified sum. Okay, what is the specified sum? It is almost similar to the earlier cases. That is, it is the aggregate of two amounts. The first one is the amount of where the services are rendered in India and the amount is paid outside India. And the second case where the services are rendered outside India and the amount is received in India. So the total of these amounts is the specified sum, and 10% of the specified sum is the presumptive income. On this income, the tax rate, normal tax rate which is applicable for the non-residents is applied. Okay, so for 44B it was 7.5%, 44BPA it was 5%, and now 44BB it is 10% of the specified sum. Okay, now the last section of the session, section 44BBB. This section is available only to foreign companies. The earlier three sections were applicable to all non-residents, but this section is exclusively for foreign companies engaged in the business of civil construction or the business of erection of plant and machinery in connection with turnkey power projects such as metro, bullet train, etc. Okay, so such SSCs can declare income at the rate of 10% of the specified sum. What is the specified sum? Specified sum is the amount paid or payable on account of such civil construction or erection, etc. So, every eligible SSC under section 44BBB is can declare income at the rate of 10% of the specified sum. So that was all about the presumptive taxation schemes for residents as well as non-residents. With that, we come to the end of this study circle. I thank Sikaza Ernakulam for giving me this opportunity, and I thank all of you who have shown patience to complete this session. Thank you.